Welcome to Sasco Intelligence. This is our first episode, first of all. That's pretty exciting. I'm Jon Fatigate. I'm the Chief Strategy Officer here, and I'm here with our founder, CEO, Omar Sabek.
Hello.
We talk about Bitcoin and cryptocurrencies and NFTs in the office and the studio all day long. So we're kind of inviting you in to hang out with us, and we're going to be talking about some specific topics today. But this is a lot of fun. We have a lot of fun talking about these things. There's news happening literally all the time. So, we're going to try to stay as current as we can, but we're going to start off with maybe one of these a week and we'll see where this goes. But thanks so much for tuning in. All right, so the first thing we're going to talk about today, Bitcoin price. It's been kind of fluctuating. It was at like a high of like 68, I think, something like that. Like earlier in the week, it's been fluctuating now. It's even hit like 58 at one point last night. What's going on with price right now with Bitcoin?
It's kind of incredible to see. This period of time where we're seeing price go up and come down, this level of volatility is to be expected. And I think largely because there's just a lot of bullishness that's out there. And when you have a situation where everyone is bullish, you're going to have traders that come in and take advantage of that kind of a situation. And we're certainly seeing that now.
Yeah, people are excited. Everyone's talking about Bitcoin right now. So
Exactly.
People are getting in. They're doing things that maybe aren't so... What do they say? Play stupid games, win stupid prizes.
Yeah, okay. And what they're really doing is they're taking out loans to buy Bitcoin. So we see, continuously as the price goes up, we see, traders come in and try to really maximize their returns, and they're taking large loans, and those loans can come in one of two forms. They're either backed by crypto or they're backed by stable coins or US dollars. If they're backed by crypto, the problem with that is, let's say they're backed by Bitcoin, as the price starts to come down, your collateral amount is coming down as well. And that's just a ripe situation for
Got it.
liquidation.
Okay, so I'm coming to you and I'm saying, take this crypto and give me money or crypto in return for that. But if it gets down low enough, you're going to keep that. I'm not getting that back.
Exactly. It gets liquidated, so the amount of collateral that you're holding comes down, and you're effectively losing the value of your asset, your main asset you're taking that loan against. And so that liquidation point gets triggered, and that creates a sell pressure on the market. And you get a lot of that happening because you get a lot of bullishness, a lot of people that are taking these leveraged loans, and it creates a liquidation event.
And explain to me sort of like the way that you can play with more risk or less risk. I mean, by how much collateral you're putting in, because that affects this, right?
Absolutely. So it's really the type of collateral. If you're using stable coins, US dollar is not going to see it as volatile a downturn as crypto assets, because crypto assets are very much sentiment driven. So you see, if you're using a collateral, like let's say $1 million of USD to take a $200,000 loan, you're not going to have that $1 million USD really reduce in value over a short period of time, as you would $1 million worth of Bitcoin, right? So if you put $1 million up in Bitcoin and the price is, let's say, 69,000, and you're taking a 20% loan on that, well, if the price drops, then you're actually going to be okay because you're only taking 20%. But a lot of people aren't doing that, right? They're taking 10x, 100x, which
Explain
requires...
that, 10x, 100x? What?
Yeah, so 100x is degen trading, right? 100x, I mean, no one is really doing 100x unless they're just trying to, really try, it's Russian roulette, really, because what that means is price moves up $1 or down $1, and if you have that 100x leverage on the exchange, you're effectively making $100 or losing $100 depending on how the price moves. Incredibly risky, because as you know, Bitcoin is incredibly volatile. And any little fluctuation in price could mean a liquidation event, but it could also mean an incredible amount of profit, right? So I think that if I could put myself in the head of these degen traders, what they're calculating is we hit a new all-time high, 69,000. If you look traditionally, every time a new all-time high is hit, price moves up very quickly from there. So they crowd into this trade, they get into this trade, and a crowded trade is going to be ripe for exploit. So you have another set of traders that come in, they see what's happening, they see that there's a lot of leverage being taken out, and so they short the market and they drive the price down, they win, they get cheaper Bitcoin, those leverage long traders lose. an incredibly risky game. But this is trading, and trading is what causes that real volatility.
So we've been seeing that a lot recently since Bitcoin has been like on a fast rise in the past couple of months, right? Like
Absolutely.
A lot of people. So that's been.
It's good for people to have a long-term view, because what it means is, so right now price is 60,000. That's a bargain. If you're taking a long-term view that Bitcoin is going to have some long-term value, it's a great buying opportunity. Historically, it's always been a great buying opportunity when this happened. When this happens, the last time we saw, probably the biggest one that we've seen in recent memory was what happened back in May, where price was going up to 65,000, kind of leveled out, and then we saw a massive downturn, massive correction, because there was a lot of longs, leveraged longs being taken out on the market. And China came out that they were banning mining, and that was the trigger that caused those longs to get liquidated, and the price tumbled. The price came down from 60,000 all the way down to 30,000. And the way I see this now, this is a much more minor. I don't see us going really below 58. If 58 does break, we could see a momentary dip down to 53. I don't see it lasting, but 53 could present a buying opportunity. But also, I think the risk of that happening is probably lesser than 10%. It looks like 58 is the base, because long-term holders, we can see long-term holders coming into the market and using it as a buying opportunity for long-term value.
Okay, so Bitcoin works on these 4-year cycles, and we know that right now the main perspective out there by a lot of Bitcoin experts is that we're in the middle of the bull market still. What are we looking for? What are we looking for that could be indicators that we're at the end of this bull market? What should we have our eyes on?
Certainly a massive devaluation that comes out of effectively thin air. If we go back to 2017, we saw price go from less than 1,000 up to 20,000 in less than a year and a half. That's a massive amount of asset appreciation in such a short period of time. And at the end of the cycle, we saw a blow off top. That blow off top, it took about a year to get to $10,000.
Blow off top meaning?
Blow off top means that the price moves very quickly in a very short period of time. So in 2017, it took about, every time there was a doubling in the price, it took about, let's say in the beginning of the year, it took 2 months for the price to double. And then for the price to double again, it took 6 weeks. And then it took 4 weeks. And then it took 2 weeks. And then when we get to the point where it takes a week where the price is doubling, you see this parabolic move, it's telling you that there's a lot of frothiness in the market. Market's getting overheated. The fundamentals might not be there to support that price. And there's all different kinds of metrics that we could look at. We could look at the amount of hash power that's being deployed to the network, the amount of new wallets that are being created to judge how much new participants are coming into the market. So really, we have to get to that point and then look at the metrics to see where we stand. When I look at the metrics now, I see that the fundamentals are all there. We have very sustainable growth, and we just have this kind of slight volatility on the surface that's related to trading. So these are the same kind of metrics that I'm going to be looking at as we continue moving into the next weeks, months, to determine if we've reached that that bull market top. And that bull market top, I really don't see happening until sometime maybe mid next year. It's very hard to predict, but as new information becomes available, it comes more and more into focus.
Okay, great. So we'll be keeping our eye on that. Very interesting stuff. Yeah. Always looking at Bitcoin. I mean, that's really we're most passionate about Bitcoin here. So that's something we're always looking at. So stay with us, keep following us, and we'll be updating you on that as it's happening. Okay, there's a lot of talk right now about CityCoins. This is a really interesting thing. This is pretty revolutionary, and it's pretty interesting because I know the mayor of Miami is embracing this. The mayor of New York is now, or the mayor-elect is now embracing this. We have people, I know someone that runs an activist group has reached out to me, a community activist, just asking questions about this. People in local government. People are interested in this. Explain to me, what are CityCoins? How does it work? What are the fundamentals there?
CityCoins is an amazing concept. At a very high level, you buy coins that are associated with a city that you're bullish on. There's 2 coins that are available now, Miami Coin and New York City Coin just launched last week. And the nice thing about the way this works is you can mine, if you wanted to, you can mine those coins. And the way you do that is there's a token called Stacks. It's built off of the Bitcoin blockchain, so it uses Bitcoin security. And once you have these stacks, you can put it into a mining process where you can mine for the CityCoin. So you can take stacks and you can put it into a Miami coin miner and mine Miami coin. You can do the same thing with New York City coin. There's a couple more cities that are going to be coming online over the next couple of months. But what's interesting about this is that it gives the market participants a say into, number one, if you're buying the coin, you're bullish on a city. If you're bearish on a city, you might sell the coin. If you're really committed to the city, then what you'll do is you'll take those coins and you'll stack them. And what that does is you're putting it into a pool, and the revenue that comes out of the mining process, you'll get 70% into that pool. Doesn't mean that you'll actually get 70% of it because it's proportionate to how much you're actually stacking. And from that mining process, 30% will go to the city. So 30% to the city, 70% to the people that are stacking the coin. And what can the city do with it? Really anything they want. We see that the mayor of Miami just recently announced that he was going to take that pool of capital and disperse it to the people in the form of Bitcoin.
That's pretty cool.
Really interesting. But what it also means is once you have these coins, if the application is built in such a way that those coins have voting power, then you'll have a level of governance over the decisions that are made for what to do with those money, with the money in a pool, based on the amount of coins that you have, which really changes.
That's very cool. This could be applied to so many different things. I mean, we've been throwing ideas around the office about other ways you can do this, but it's really community driven,
Yeah, and it's kind of like the concept of a decentralized autonomous organization. If you've ever heard of that term, it's called a DAO. And it enables a new way of people coming together and sharing their value in the form of these tokens and making decisions in a very transparent, a very open way, and one that is really, you're taking a risk with these tokens, but in exchange for that, you're getting, a say in determining what those tokens are used for. So a really, a real kind of shift in a way that money can be spent. And because typically if you think about a city, they collect taxes and it's up to the politicians and the bureaucrats in that city to decide what to do with it. So this kind of turns it on its head, and it's still very early. I mean, this is very, very new stuff.
Very early.
With that comes some risks. One of the risks, and we ran into this firsthand, is we bought some stacks, we put it into the mining process, and the way the mining process works is every block, it's a blockchain, every block, there's a stacks that a participant in that pool that is affected like a raffle that wins, in the case right now for New York City coin, which is what we tried, 250,000 New York City coin, which sounds amazing, but New York City coin right now doesn't have any value. But what happened with us is we put it into this pool and we never won. So we bought the stacks, we put it into the pool, we never won any New York City coin.
Well, here's the thing with mining right now, right? Okay, so there's a couple of ways you can get these coins right now. With Miami coin, you can actually buy it right now.
Yeah.
New York City coin, you can't yet. You have to mine for it. And the mining process is risky and it's complicated a little bit. You have to do some research. So keep an eye out. If you're even interested in this, really do your research on the actual risk, because what's happening, we're seeing already, because you could see exactly how much each participant is putting in, what percentage. And it's a lottery where you can buy as many tickets as you want. We're already seeing big people come in with big amounts of stacks and they're just dumping them in there, taking up 25, 45% of the entire pool. And then a lot of other people are putting in maybe 1% at most, and they're getting gobbled up. So it is a free market right now, but you're seeing a lot of people come in and just dominate it. So you look at the risk, decide if it's something you want to participate in. If not, wait, because New York City coin will be available at some point to just buy.
Exactly. At some point, it's going to be listed on an exchange. And once it's listed on an exchange, that's a real game changer. And we'll see what the true value of these coins really are. And again, very early days, lots of risk, but also potentially a lot of reward.
Definitely. And what you are seeing, which is cool, is actually smart contracts in action, because that's what they're using with this.
Exactly. Absolutely.
All right, great. So last topic for today. We're going to talk about NFTs. So we do have a client right now. One of the services that Sasco Digital provides is we advise clients, advertising agencies, brands, whoever, on NFT technology and how it works, and we help them with the technology and the security and understanding it and educating them, really empowering their people so that when they have an idea, when they have a creative impulse, they can actually make that happen, turn that into reality. We have their back there. So we're working with a client right now it's an NFT project, and we've been really doing a lot of research on, okay, what is the best blockchain to do this on? And we've actually had some surprising things happen. So Omar, what are you kind of finding by doing all this research?
So the first blockchain that I looked at was Ethereum, because Ethereum is the market leader. There's just so much value locked up in Ethereum. It's the most popular platform for NFTs, but we have firsthand experience with using Ethereum, and if you had the opportunity to use it recently, you've noticed that the gas fees are incredibly high.
And explain gas fees really quick.
Gas fees is a transaction fee. So, anytime you want to make an operation that requires a processing requirement on the blockchain, you're paying that fee. And so a simple transaction, you got to pay a gas fee.
And who are those fees going to?
It's going to the miners on the Ethereum blockchain. Great. Now, why are these fees so high?
So they're winning right now?
They're doing very well right now. These fees are so high because there's just so much activity that's happening on Ethereum, which is great because it means that Ethereum is really under demand. But the bad thing about it is, as these fees get higher and higher, we're looking for alternative blockchains to launch this NFT. So what are the alternative blockchains? There's Polkadot, there's Solana, there's a few more. But there's also something interesting that's happening, and that is gas free or low gas L2s that operate on the Ethereum blockchain. So recently
that's like the EV, the electric vehicle of the NFT world.
Exactly. It's kind of you're using all the security of the L1 blockchain, but it's a brand new L2, so it's pretty much empty, and it's cheaper. It's cheaper to sell, buy, trade, and mint. Minting is creating an NFT, mint NFTs on these blockchains. So two that I'm looking at right now is Metaplex and Immutable X. They seem to be the platforms that are really picking up a lot of excitement in the Ethereum community and in the NFT community. And we still haven't ruled out using Solana. If we're going to use Solana, it's really going to come down to what are the costs, what is the long-term viability of the chain. And every day that goes by, Solana picks up, more and more credibility as a blockchain that could, be this future platform for NFTs. It already is. I think it's proven itself. The question is, how much of that value is going to be taken from Ethereum and move into Solana? My concern is, really very simple. If there's high gas fees and it costs a lot of money to do this stuff on Ethereum, then, this is our own experience. We're going to look for alternatives, cheaper alternatives. Because I believe that at the end of the day, people don't really care where they're getting their NFTs from. Just like if you buy a shirt from one mall versus another mall, does it really matter? These companies are like FTX is what backs Solana. They have a big name in the market. They're not going to want to ruin that name by doing any kind of shady things on their blockchain. So that gives me all the assurance I need that it's going to be a viable platform for the future. But that being said, we still have to do the research. We still have to find all the different trade-offs and put on a table and make decisions on what is the best blockchain to launch NFTs on right now. Not only from a viability perspective, but also from a cost perspective.
And then looking down out at the horizon right now, I know that with the new Bitcoin, the Taproot upgrade, is that the right word?
Yes, Taproot upgrade.
The Taproot upgrade, now that actually impacts NFTs in the future, right?
It could. So what is Taproot doing? So Taproot is effectively think of it like a new platform. I like to kind of call it the new app store for Bitcoin. And the analogy I use is we all remember, version 1 iPhone didn't even have an app store. And that's like Bitcoin, right? Bitcoin for the longest time never had the capability to create smart contracts and create this. And when I talk about app store on a blockchain, I'm really talking about smart contracts, because with smart contracts, you can really, the world's your oyster in terms of the possibilities that exist in creating these new kind of financial applications. NFTs is a form of a smart contract. There's other forms of smart contracts. Now, when that comes to Bitcoin, Bitcoin is, it's got the longest run of all the blockchains. It's got a lot of capital locked up in it. It's got all of the security that you need because of the decentralization that you find in the Bitcoin in the Bitcoin protocol. But it also has this, this amazing scalability because the Bitcoin layer 1 is very simply just for transactions. Layer 2, Lightning Network, is for very fast and instant transactions. So you get security and you get scale and you get speed. So that becomes, I call it, really the killer of all the other, blockchains. But it's going to take time to get there.
Very interesting. I mean, it's crazy. Things are changing every day. But
it's part of fun.
But Bitcoin never really fundamentally changes, and that's what's beautiful about it.
Yeah, Bitcoin has become really ossified, and the more as time goes on, the more people try to change it, the harder and harder it gets because there's a lot more investment capital locked up in it. There's more people that are in the community that came into the community because they didn't want to see change. So I think if you think about it this way, those monetary policy principles that are in Bitcoin are pretty, kind of cast in stone. Around the edges and around the layers, what possibilities exist there? The world's your oyster, and it's going to be very exciting to see.
Very exciting. All right, thanks so much, guys, for watching. Please subscribe to our YouTube channel. We'd love to talk to you if you are an individual, a business, an agency, anyone. If you're looking to buy Bitcoin, you're looking to learn more about it. You need any help with anything, if you're, like I mentioned, an agency looking to mint NFTs or just learn more about what's happening, go to our website, sascodigital.com, fill out the form, and we'd love to talk to you. Thanks so much, Omar, and we'll see you in the next one.
Thank you.